Hi, friends. So, welcome as we proceed. One thing about audit, public will always expect the auditors to disclose fraud or to report on fraud. So, when fraudulent activities happen, we hear the public saying, "But where were auditors? Where were the auditors? What were the auditors doing? Did the auditors not vouch the books?" Let us now look at what our role as auditors is when it comes to fraud. Okay. Error is different. The difference between error is that it is unintentional. It's a mistake. We are all humans. We all make mistakes, okay? But fraud is intentionally when you try to circumvent situations, the books, records, processes for your own personal gain. And trust me, it is because of greed in our world today. That's why we find fraudulent activities occurring. Some people want to fill their mouths with all the pleasantries in the world, to the extent that it will come out from their nostrils, their ears, their eyes. Then before they will feel that they are satisfied. It's greed, it's selfishness, it's evil, fraud. And as auditors, listen, we have a key role to play over there so far as fraud is concerned. Of course, we are not fraud detectors. Okay, we are not detectives, but where we can do something to reduce that risk, let's do it. Whatever we can do to reduce the risk of fraud, let's do it. Okay. So let's see what the standards say, what the requirement says. Okay. That's why I always say audit is a passion. Okay. If you have the passion for audit, you do it clean. All right. So errors, fraud, and unlawful acts. So we want to see what is meant by error or misstatement. Like I said, error or misstatement is where you make a mistake. It's not intentional. Okay. We all do mistakes. We all commit mistakes. Okay. Which can be corrected. Normally, errors in the financial statements are corrected by adjustments to reverse what has been wrongly stated. Okay. We look at the implication for the auditor if the reported fraud or error is material. If error is material, we adjust the books. But if fraud is material, we report to those who are concerned. Okay. To the audit committee, to the regulatory body, so on and so forth. Okay. As an auditor, what is your responsibility when it comes to bribery and corruption when you detect fraud? Let me put it that way. We want to appreciate the importance of communication between the audit team members. Okay. Listen, when you disclose some of these things, discuss with your friends on the audit team. That's all I want to say here. Tell them, don't just keep it to yourself and think you are the hero. You've identified a big issue, so you want to become solely recognized for your yeoman's job. Yes, that's why you always see auditors writing using the plural we. Even if it's one person who did the work, we use the word we. So that collectively we can all share the blame. Collectively we can all share the glory when it comes, okay? Who is responsible for detecting and prevention of fraud and error? It's the management. It's the management, okay? Yeah, it's not the auditors. Understand who the auditors report to in particular circumstances. We'll look at that and explain the procedures in connection with discovery of unlawful acts by the client or his staff. And then any ethical rules on breaches of the principality, on the principles of confidentiality, and how we can continue to work as auditors or we can resign when we identify some of these frauds. Expectation gap, ACCA defined it that the public has a certain expectation about what the auditors should do. But then there is actually what the auditors should do. So what does the public expect of us? But what is the real expectation required of us? The gap between is what we call the expectation gap. Expectation gap, we have standards gap. Remember earlier we had looked at reasonable gap and performance gap. So I can skip the performance gap here. But again, we have standards gap, where the public believe that auditing standards should be certain things. But in reality, the standards are different things, okay? So the difference between what the public believes the auditing standards to be and what they actually are is a standards gap, okay? And then we have the performance gap. I'll skip that. So are we performing as required, okay? Or we are performing below? what is required, okay? Then liability gap, where the public do not understand to whom the auditor is legally responsible to report. Who does it report to? Auditors? Do they report to shareholders, or they report to management, or they are required to report to a regulatory body? Okay, that gap is also there, okay? So upon whom does the liability fall for in terms of who the auditor reports to, okay? So there is always the need for us to educate the public on what these gaps are. Let us tell them that, listen, auditors report to shareholders. Shareholders hide them. Of course, their reports will be shared with the management, and at the end of the day, it is meant for the shareholders, okay? So let's educate the public to reduce some of these gaps, not just the standards gap, but the performance gap, liability gap, reasonable gap, okay? At the end of the day, we want to improve the quality of our audits so that the performance gap will be reduced. So perform to the highest standard, to the highest capability. At the end of the day, the public will what the public expects of you and what is actually expected of you will be close. I mean, thin line of separation there, okay? Sometimes there will be no line of separation. Now, let's look at responsibilities of the directors. I'll say certain things as well, which you may not find here, but which are in the text, okay? Remember, it is a responsibility of the directors to detect fraud, okay, to prevent fraud, actually. The auditors are not detectives. Sometimes we think we are detectives. We are coming to work in terms of, in line with the terms of engagement. Sometimes we are seen as detectives. Auditors are coming. Auditors are coming. They think we are policemen. No, we are not bloodhounds. Remember, we are not there coming to sniff for something and then to put someone in bad books. We're coming there to vouch what you've asked us to vouch, okay? Now, the directors, they must adopt best corporate governance principles. They must make sure they get some expert non-executive directors who will run the various boards, okay? The nominating committee, the remuneration committee, the audit committee, get experienced non-executive directors to run the show, okay? Now, they are also required to institute appropriate systems of internal control, okay? If they have an independent internal audit function, they should resource them with all the logistics and the resources they need. If they have right-sourced experts to augment the internal audit function, they should resource them as well, okay? Now, any laws and regulations that govern the operations of that company, the directors need to ensure that they have a register of these laws and regulations and that they are up to date, okay? They are up to date. Now, does the business inform or have a way of communicating their internal policies, codes of conduct, fraud, risk regulations to staff? Is there a way they tell the staff that, listen, if you don't do this, this is the sanction that will happen to you. If you do this, this is what will happen to you. Are they properly trained in the policies and procedures of the company? We need to look at all of this. So these are responsibilities of the directors. Okay, these are the responsibilities of the directors. Again, where they need help in terms of legal jurisprudence, they must consult legal advisors to advise them on such areas. Again, any areas where there's been some breach of laws, any complaints, any violation of codes of conduct, the directors must keep a detailed register of who committed what offense and what the sanctions were, if any, have been effected to them. There are times when people will not comply. I mean, non-compliance with the laws and regulations. Sometimes they cannot, the organization itself will not comply 100% with these laws and regulations. So non-compliance is key. But the question is, if we do not comply as a company, if we don't comply with these laws and regulations, to what extent does it affect our going concern status? Will it lead to curtailing of operations and can cause us to go into bankruptcy? How does it affect disclosures in the financial statement and even the preparation of the financial statement? Okay, non-compliance. To what extent does it affect the industry in which we operate? Okay, now at this point, when the auditors come in, they must recognize that all businesses are regulated. with some laws and regulations. Auditors must get these documents, the policies, the regulations, the laws. They must read and review them. That's why I always say audit is a passion. Okay, if you don't have a passion to read and understand some of these laws and regulations, you go in and you may end up committing some terrible job. Your performance will be poor, okay? And then we widen the performance gap. We don't want that to happen, okay? But remember, we don't have to understand all of these laws. We have to ask directors, I will come to that point, to explain to us, okay? What is the approach to non-compliance? Like I said, make sure you understand the legal and regulatory framework within which you work. ISA 315, understanding the business and its environment, okay, and the sector in which it operates. ISA 315 clearly tells us that. So our approach to non-compliance should conform with ISA 315, where we obtain a general understanding of the legal and regulatory framework within which we work. And are we complying with the reporting framework? So that should be the approach. Secondly, obtain all correspondence, all policies and regulatory documents, okay, any licenses, and read them, inspect them, read them. Where you don't understand, speak to management to explain to you, all right? Inquire of management whether they are actually complying. Sometimes these are just good on paper, but in reality, management is not even complying with them. Okay, sometimes when you engage the staff, the management, and you talk to them, that can even give you a hint that they don't even know what is happening. They don't know what is inherent within the document. They leave it so voluminous. The book is there. Effectively, you look at the papers, you see, wow, this is good. But you ask them simple questions on that, and management knows nothing about it. The auditor's approach should also be said that we should be alert to the possibility that other audit procedures may unravel instances of non-compliance. So our audit approach should be comprehensive, holistic, all-encompassing, so that they can at least unravel areas where there are breaches or there are non-compliance issues. We are not just ticking the box. We must think outside ticking the box, remember. So non-compliance sometimes will be more of ticking the box, but we'll go further again, especially in areas of fraud. Now, you must also obtain management representation letter, which should tell the auditors that, hey, auditors, we have given you all the information that you need, areas where we think we have complied or not complied, any contingencies lurking on our heads, disclose it. So management must give us all these written confirmations and disclose everything that we as auditors need to know, so that when we are auditing, we know areas where there are breaches possibly and areas where there is compliance. What happens when the auditor identifies issues of non-compliance? How do they respond? Okay, first, let us understand what has happened. If you don't understand, ask management to explain. They should give you details, document it, record it, okay? Now, we should also understand the circumstances that led to the non-compliance. And as usual, we must gather sufficient, appropriate evidence to evaluate the possible effect of these non-compliance on the financial statements we are auditing, okay? So check, they didn't comply with XYZ. How does it affect the reporting of assets and liabilities? Document your findings, even if your overall evidence is not significant, it's not pervasive, document it, okay? Keep it on file, okay? Keep it on file. Otherwise, KPMG, they will always tell you, if it's not documented, it is not done. Now, report your findings to an appropriate level of management, could be senior management, could be independently to the non-executive directors. But like I always said, listen, you should not be the hero in an audit work. There is always an audit team. Before you report your findings to the higher level of the organization, discuss with your team members. For all you know, there's some other perspectives to that, okay? Discuss with them. Otherwise, you can put the whole team in a big trouble. Do we have to modify the auditor's report based on non-compliance? In extreme circumstances where we think that this non-compliance could affect the reputation of the company because management has breached the trust we had with them per our terms of engagement. If that is the case, we should resign. We could resign. We can resign from the assignment altogether and tell them, listen, we will not proceed again. This is quite risky. Our image is more important to us. Initially, I started, what's the difference between fraud? I've always said this, wherever there are human beings, there's fraud likely to occur. Fraud doesn't occur in the zoo where animals are, or nor does it occur in the skies where the birds, fowls of the air fly. No, it occurs where human beings exist, in the home, in the workplace, in the school. Fraud occurs there. We are not discussing fraud risk management. I would have gone further, okay, and giving you theories underlining some of these fraudulent activities, okay? So let us just stick to that. It occurs where there are human beings. And computers don't commit fraud. Somebody sits behind a computer and effects the fraudulent act, okay? Now, so fraud is intentional. We want to deceive somebody. We want to deceive some guy, some group of people for our own advantage, okay? And we have the Fraud Act of 2006, which details out all these. Now, we could, in the process of auditing, identify fraud, okay? The question is, how does it affect our reports, okay? If it is an error, it is unintentional, and it is management's responsibility to detect fraud, to prevent fraud, and to also detect and prevent errors from occurring. If we identify it as auditors, we pass adjustments. We ask them to pass adjustments. We don't even effect the change. We pass the adjustment and give it to management. Can you please effect these changes in your books? Then they bring it back and we sign off, okay? So sometimes fraud will occur where people will falsify documents or they will intentionally misapply some accounting policies. ISA 240, the auditor's responsibility relating to fraud in an audit of financial statements, now gives us auditors responsibilities when it comes to fraud. And here it says that let's consider the fraud risk at the transaction level and at the consolidated financial statement level, okay? At the individual transaction level, micro, and where we consolidate all into the overall big picture, okay? And so also we are asked to consider risk of fraud as part of our planning process. When we are planning the assessment of controls and audit procedures to undertake, we need to consider fraud as part of our planning process. Again, we should also consider the risk factors and incentives that could cause management to engage in fraudulent activities or fraudulent reporting. Perhaps there could be so much pressure on management to achieve some unrealistic targets. So they will cook the books, okay? Poor control environment, okay? Like I said, pressure to meet unrealistic profit targets. So they'll cook the books. Sometimes management also want to get higher bonuses. So they'll cook the books so that the books will appear neat, get some higher profits, fictitious profits, and then they get their bonuses. Fraudulent reporting includes a number of things. If you look at the fraud certified fraud examiners paper, we have criminal law, and we have a whole section on financial statement fraud. That is where fraudulent reporting falls under. It's a whole module on its own. You write a separate exams on that altogether. I don't know whether the system has changed now. Now, under financial statement fraud or fraudulent reporting, you could see management misrepresenting, changing, falsifying accounting records. Sometimes they omit the transactions, okay? And sometimes they will intentionally misapply the accounting principle. And of course, they could misappropriate the assets, misappropriation of assets. For example, a management staff has a company car. He's supposed to use it officially for field work. But on weekends, on holidays, he uses it to go to the club, to the riverside for some excursion, burns the fuel in the name of running company errands, but for his own personal gain. So misappropriation of assets is considered fraudulent reporting because there's no one monitoring the logbook for the fuel consumption, okay? Now, at this point, auditors, we are required to look at possibility of management overriding controls which are in place. Because he's the CEO, he's got a company car, he uses it to run his own show, then comes back and reports that it was used for official duties. We should also look at for fictitious journals and adjustment of assumptions and estimates. Okay, so the provisions, that is why auditing IAS 37 provisions and these contingencies, it can be quite difficult, okay, because it's usually based on assumptions and estimates. And again, you see that mostly at the year end, because the year is coming to an end, you see people trying to pass all sorts of adjustments, and immediately the year ends, the next day, they'll reverse all the adjustments. So IAS 10, events after the year end, post year-end activities, IAS 10 is also an area which is worth looking at when you are looking at fraudulent reporting, because people intentionally pass the adjustment and then they reverse it. Aggressive earnings management is also something we should look out for. Is there any pressure on the management for them to report certain unrealistic targets, profits, which could affect their bonuses or their entitlements? Okay. Also, let's consider areas like revenue recognition, mark to market, accruals, liabilities, and like I said, provisions, reserves are areas the auditors must look out for. How do we do this? How do we do this? Okay, as a 240, how do we do this? Confirm the real owners who benefit at the end of the day, those guys whom the business actually belongs to. What is the management, their own risk assessment? Review their own risk assessment, which they've conducted, if any. Now, look at the internal audit report. You remember ISA 610, where the auditor will have to place reliance on the work of auditors, sometimes of experts, okay? So look at those ones. Internal audit reports, we need to place reliance on them. So we have to read their reports, which they have. They must share it with you, okay? Carry out your own risk assessment processes. Are there any areas, vulnerable areas, any fraud risk indicators that pops up, okay? If somebody hints you, a whistleblower comes and gives you your information, don't consider it as useless. Note it down, okay? Any communications between management regarding fraud to employees? Is there any communication, any publications, any bulletins, okay? Review the management communication with independent directors, their emails sometimes, if necessary. Obtain that. Whilst working on this, you need to take note of these, okay? Take account of these. Like I said, our management overriding controls, use of journals to pass adjustments. There could be some secret or separate funding arrangement with some banks or lending companies, or even with payables, with trade creditors, okay? Are there any third parties involved in transactions on contracts, okay? Look out for all those things. Sometimes the company may not be able to retrieve their sales from their debtors. A lot of bad debts going bad, or debts going bad. So they may involve a factoring agent, an independent company who will chase these debtors to pay. Note these transactions. Try and find out what is the link between that company and then the one you are auditing. Is there any director who may have a stake in that factoring agent, okay, company? Now, when you are drafting or you are implementing your audit procedures, we need to evaluate the above. But whilst evaluating this above, we should consider understanding the client and its business. It's a 315, okay? Make appropriate inquiries, speak to those who are required to be spoken to, the management especially. Test transactions. Check the extent to which these transactions affect the overall picture. Okay. Now, if auditors detect fraud, what should they do? Check, would it impact the financial statement? If it is significant, okay? If it is quite huge and it does not involve senior managers, report to the senior managers, okay, in writing. But as usual, I will tell you, as a team, don't just write to the senior management. Discuss with your audit team before you draw that final paper or conclusion and send it to them. For public interest entities, okay, or in my back home in my country, Ghana, you will normally hear state-owned enterprises. So for these SOEs or PIEs, the auditor must report any instances of non-compliance and fraud issues to the audit committee, okay, to the audit committee. And it's a good practice. In any case, report to the audit committee. If the detected fraud is material, the audit report could be affected, okay? If management themselves are involved in the fraudulent activity, then you may want to report to the non-executive directors so that they can follow up. And of course, you must report to the annual general meeting, to the shareholders at the annual general meeting. Now, authorities may need to be informed in case of banking, insurance, or financial services companies, statutory defense. We need to write to their regulatory bodies that this is what these guys are perpetrating, okay? In extreme circumstances, if you realize that your reputation is at stake and you are being hindered to undertake your work in an efficient manner, there's a scope limitation on the part of the auditor, you could consider resigning and explain the circumstances. That's why we have the statement of circumstances. We'll get to that one, okay? ISA 700, forming an opinion and reporting on financial statements, it gives out some specific requirements that applies to all entities to explain what extent the audit was capable of detecting irregularities, including fraud, okay? So here we are required to look at all relevant laws and regulations that may have been violated, mention them. There may be the need to refer to disclosures where we normally keep them under the CAM, called the key audit matters, disclose them. The wording may have to be carefully chosen so that people will not misinterpret it. The word fraud carries a huge weight, okay, carries a huge weight. So be careful when you are using the word fraud to ensure that you are not implicating yourself. Make sure you have enough justification to underpin why you are using the word fraud so that nobody will misinterpret it, okay? Now, clearly, not all audit reports are the same, so they will have to be reviewed carefully before the final paper or report is signed off. Auditors, we owe a liability. We have a liability that we need to do our work perfectly as best as possible based on the engagement letter. If we flout that and we don't exercise our professional competence and duty of care, then friends, we could end up getting, I don't want to use the word impeached, it's more like a political term. We may get ourselves in trouble where we could be liable for fines, and even we could lose our licenses to operate. So make sure you do your work to the best of your knowledge, maintain all the technical know-how, keep yourself updated, okay? Make sure you have complied with all latest auditing standards. Don't be negligent. Negligence is terrible. Should I resign when I see these things occurring? Sometimes yes, sometimes no. It depends, okay? Now, if the firm does not intend to act on the report, on the offense you've seen and you've reported, okay? And if it involves senior management and they are not ready to change, you may consider resigning. ISA 240, okay? Our roles or our responsibilities in relation to fraud or acts of fraud on the audit of the financial statements. If possible, and if preferred, the auditors could remain at post and still continue to discharge their duties, provided they think the effect is not pervasive and material enough to affect the reputation of the auditors. If the directors refuse to release the accounts or auditors are restricted in our communications, scope limitation, we should resign. We should resign. Now, like I said, once auditors resign, they must complete this statement called a statement of circumstances. It should clearly spell out the circumstances that is leading to our resignation. It should be a public document. The new auditor who comes on board should be informed and should even be given a copy of this statement of circumstances, okay? Telling them the reason why we have resigned, okay? Now, the auditors could also take legal counsel from their professional body before acting. All right. There are some questions on page 344 and 345, a case study on Megachem PLC, and student self-testing questions. You could get answers on in the core text, okay? Again, I said at your free time, okay? It's a good story there, but I said at your free time, review the examination question on page 345. Assume the role of the auditor and see how best you can relate to the issue of the fraud in that case, okay? You are the auditor. What will you do? Put yourself in it. Audit is a passion. And only those who have the passion to do that work end up doing good jobs. Okay. And it's not just the passion, but it's a passion which comes with technical know-how. Okay, I have had the privilege of being an auditor, mainstream external auditor, mainstream internal auditor, and also mainstream internal external auditor. I was wearing two caps in one of my audit firms. I was reporting internally to the management, but externally to an independent supervisory body. So it's a lovely practice. Hopefully one day I'll retire. I'll go back into audit. Who knows? I'll see you, friends. Time is far gone. And then take care. Bye for now.